First of all, maybe get your thoughts on the recent market trend we're seeing. So I think we've passed the stage when the market was gaining dramatically. Now we see only minor gains on a daily basis. In fact, yesterday we're beginning to see losses as some people are beginning to take profits.
Good morning, Wole, and thank you for having me today. Just like you've said, we've seen some profit-taking come into the market this week. We expected that last week, but fortunately, we still saw some stocks heads up for the rest of the week. Generally, we still feel that profit-taking might still continue in the market this week. We've seen some stocks like Diamond Bank gain as high as around 5 naira. We've seen stocks like GTB trade as high as 50% year to date, and also Zenith Bank were 41% year to date as well. So we feel that with all of these gains in the market, some traders will still come to the market and take some profits. So, you know, to actually create more entry point for some other investors that would like to come into the market.
But the market was clearly overdue for some profit taking. I mean, it's up over 30%, and most of those gains over the last 3 months. But let's move on to some specifics. We saw Zenith Bank release numbers yesterday. Profits after tax up 50%. The market's reaction was somewhat subdued. Can you just talk us through the interest we're seeing in Zenith Bank? Recently, we've seen heavy trading in the stock before the results were released, and that continued into yesterday.
There is still lots of interest in the tier 1 banks. If you look at Zenith Bank, GT Bank, and First Bank, and we still see that continue, especially from the offshore investors. They're still very comfortable with this pricing, and we still see them come back to even take volumes as much as they can get. For example, for Zenith Bank result that was released yesterday, we saw them release about 64 billion profitability. That's their earnings for for 9 months, which was really impressive compared to a GT Bank that even reported 63.9 billion. So we still feel that with that kind of result, investors will still be comfortable and they will still come in to buy. Net income has also increased for the quarter. Even their net interest income also increased. So we still feel that that trend would continue up to year end, and all of this would help the market to grow.
Yeah, of course, the banking sector is a place that a lot of investors want to be. Let's touch on news flow around Diamond Bank. I mean, that's another stock that many people are calling as a top performer for the rest of this quarter. Of course, we saw very positive results from them as they kicked off the earnings season, the Q3 earnings season. But of course, another news flow around them is their plans to buy a European bank. And how is the market reading this, and to what extent is this impacting on the valuation of the stock from Stanbic IBCT?
Just like I've said, for the tier 2 banks, we still see a lot of interest in stocks like Diamond Bank, like Sky Bank. We still see investors coming to buy them. Even the Diamond Bank was at 2 naira at the beginning of the year, it gained as high as 5 naira, and though now at 4 naira 40 kobo, but we still see a lot of interest come through. Our target price on Diamond is still 6 naira. But on the acquisition of a European bank, what we found out was that, well, they might actually acquire one of the defunct banks, either Intercontinental subsidiary in the UK or Bank PHP. So, but what we think that is most viable for them is the Intercontinental subsidiary. But we don't see that contribute so much to earnings in the short term, because if you look at the other banks that have actually acquired some, that have some UK subsidiary, for example, First Bank was about the impact that their subsidiary had on their earnings, just about 5.5%, and for UBA about 0.31%. So we don't expect so much from Diamond on the UK subsidiary, but in the short term really, but in the long term we expect that to be positive for them. They just want to use that subsidiary to capture some of their foreign inflows into the UK market.
Right, Dolapo, let's assess the local interest or local investors' appetite for equities. Of course, that has changed a little bit. What I'm hearing now is that about 30% of daily demand is now local. Can you talk to us about how that is changing from where you sit? Your thoughts on particularly institutional investor demand right now. We've seen the market daily trades come down a little bit over the last few sessions. So to what extent is this a reflection of local demand?
On the local side, for the retail investors, we see them come back. They'll be more better on the kind of stocks they actually request for to buy and even to sell. But from the institutional investors right now, fine, the cycle is changing. They are looking at, okay, these are the stocks that we're interested in and all of that. But really, they're saying that for them, prices are a bit high. They might want to look at sub prices from where the market is right now. But really, we feel that they would come back at some point. They're looking at them, they're asking questions. So it just seems positive.
So of course, a lot of people are saying that that's the reason why this market is going to go higher going into the rest of this quarter. The locals are going to be more active players. But let's touch about one of the reasons why they are getting back into the market. The market making program, let's just review it right now. It's designed to create liquidity. To what extent is that really happening? We have 28 stocks in that program right now.
What the market making is supposed to do is to rightly place pricing for what market makers are thinking. Depending on the pricing they are looking at, they are supposed to take the market to reflect that position. So that's what the long-term view of the exchange is on the market making program in total. But right now, if you look at it, fine, on liquidity at some point it actually increased because we saw so much of retail investors come into the market and pick up those stocks, especially for the ones that are a bit undervalued, to take them to where they're supposed to be. So I think that would continue, which is positive. Then at the same time, on the liquidity, as we go into the market making program, I feel that that would also improve. Market making has only contributed less than 0.5% to market liquidity this year, and to look at it, that it has only run for like 6 weeks. So I figure at the point when going into next year, really, when market makers actually make up their mind as to what exactly they would want to achieve, just to agree on stuffs and do transactions, I think market would feel the reaction. And to add to the fact that local investors actually place themselves in the market at that point to enjoy the rally that the market might see.